Joining me is Laurence Rapp, the CEO of Vukile Property Fund, and you're watching Captains of Industry here on CNBC Africa. Laurence, thank you very much for joining us.
Thank you.
Looking at the 2016 half-year results, which obviously your year end is in March, you were sitting there with a distribution growth of 6.1% of your core properties, 7% if you take into account your acquisitions. And if you look at your target for that period, it was between or your guidance rather, was between 7 to 8%. So you were at the lower end. You have stated that was a result of some incorrect billing from the municipality. I see that was provisioned for.
Correct.
But if you're looking for the next half, what are we looking for?
Bronwyn, I think we'd expect to deliver results again within that 7 to 8% range, probably in line with the 7% that we did half year. It's a very frustrating set of results for us because I think really in a very tough environment, the portfolio and the team have worked superbly. It really was just that issue, as you mentioned, of the incorrect billing from council, which knocked around 12 million rand off our earnings. We took a view to account for that conservatively, so it is fully provided for. Had that not happened, earnings growth would have been above 8%. And we'd be able to sort of, really come in ahead of the upper end of our guidance. But I think it's appropriate for us to be conservative in the way we've handled it. So we'd be saying, we're still on line for around 7% for the full year.
Incorrect billings, are they something that plague you on a regular basis, given the state of the local municipalities?
It is, unfortunately. It's something that one has to be aware of. We have a team here. We have a full-time engineer who's focused on the energy management, which includes the billing around the portfolio. So it is something we have to be aware of. This was something just sort of unusually large and unusually peculiar rather, in terms of the situation, and that's why we've we've provided. Normally we do have these provisions. It's $1 million here, $1 million there. Sometimes you get money back. So it comes through in the swings and roundabouts in the portfolio. But this was something quite anomalous, and therefore we felt we had to deal with it as a specific provision.
August 2015, you announced that you would be acquiring a 21% stake in Atlantic Leaf, which gives you that offshore property exposure, specifically in Western Europe and the United Kingdom. You have also stated that you will increase that to some 30% when the timing is right.
Correct.
How is that asset performing for you? It's early days still.
Sure. At the moment, performing very well. Atlantic Leaf, as you'd be aware, are looking at a capital raise at the moment. They have a portfolio that they're looking at, and that should grow. So we do see Atlantic Leaf becoming a very important part of our business overall, and certainly our foothold into the European property markets. We were looking at some other markets as well. Unfortunately, given the volatility of the rand, interest rates having risen, a lot of the plans we put in place at the interim stage, or announced rather at the interim stage, we're going to have to change and pull back on.
Because the economic landscape has changed so dramatically in South Africa?
Exactly. Cost of funding is up by some, potentially 200 basis points. That's a weighted average of debt and equity. And therefore acquisitions that were profitable and commercially sensible, 3-4 months ago, are no longer viable.
You have stated recently that your intent is to boost your residential element in the portfolio up to around about 10%.
Yeah.
Where are you in that process?
Sure. So if I can maybe just take a step back, I think the strategy within Vukile has been to drive retail as being the predominant asset class. Today, retail is sitting at around 70% of the portfolio. We think it's a superb portfolio. You've got about an 83% national tenant component within the retailers, again, which shows you the underlying strength of the cash flows coming through and the predictability of those cash flows. And that's up from about 50% around 2 to 3 years ago. So we've really done some major work on the portfolio of selling out of office and industrial, probably to the tune of about 2 billion over the last couple of years.
And then putting all your efforts into retail.
Correct. Now, where do we go from here? As you correctly say, what we said we wanted to do was continue growing the retail exposure. We think retail is the most resilient asset class of all of them. If you have a look at all the IPD stats historically, that would bear it out as well. So that we feel is A, our expertise, and B, the most resilient asset class of the property subsectors. Residential, we think, has got some very positive characteristics, and we would like to grow our exposure, and then international. So in a sense, we're talking about a rotation out of office and industrial into residential and international.
Are vacancies up in industrial?
Funnily enough, not. Our portfolio is performing very well. So in fact, if you look at our office vacancy sitting at around 7.5%, that's below national averages. So we in fact are doing quite nicely in the office space, but without economic growth, And without seeing new business growth and new development, you don't see the demand for new space necessarily. All you do is seeing tenants moving from one building to the next. So there's a lot of effort that gets put into retaining tenants, and that often comes at a cost. So it is possible to retain your tenants, but it's really
a highly contested area.
Highly contested, and you're treading water. You're not really growing in where you are. Industrial is similar in that space. I think there is a lot of growth in the logistics environment.
It's more about warehousing when we talk about industrial in South Africa, isn't
Correct,
it?
and many factories that we have, which again historically have performed fine. So vacancies are maintained, but you're not seeing the rental growth that you may see in other sectors.
How are you feeling
Well,
as a South African captain of industry?
I'm an optimist. Okay, so we have put a lot of thought into our strategy. We had a lot of plans, they were very exciting plans, but the reality has changed. It's frustrating. What we did as a team is we very quickly reassessed the situation. We spoke to a lot of the key stakeholders in the market. We spoke to our advisors, we spoke to our board, and we said, right, we're dealing with a new set of realities now. What does that mean for our strategy? What needs to change? And I think we've been able to adapt very quickly to that. So I think we are confident in the sense that we know where we're going. We've got a very clearly defined action plan as to what we have to implement in order to sort of, set the company up, for this future environment. Is it frustrating that we have to deal with the volatility, the changes in our market? Of course it is. But I think if you didn't have your mind attuned to this changing environment, you're not really a realist.
What attracted you to the property game? You said you've been affiliated with the property environment
sure.
for a while.
I mean, I've got good pedigree in the property industry. The Rapp family has been involved in property for many years here. Although my direct family was never involved in it. So, it's always been something that's been in the family and in the blood. The opportunity never really arose. My training is in financial markets, so I've worked as a stockbroker, corporate finance, private equity, banking, insurance over a number of years.
And when did the Vukile property opportunity come to be?
The previous CEO had decided to resign. The board felt that they wanted to bring on somebody with a business building background, somebody who'd had a track record in growing a number of businesses, which I had done in the banking environment. And I was made the offer, and I think the board took a view that they could really combine my set of skills that I bring in with the very strong property expertise in Vukile, and then hopefully take that forward. And I think we've had a nice run. We've grown the assets by over 300% in that period. The market cap has grown also.
Nobody's going to be unhappy with that.
So it's been a good run. I think there's hopefully much road ahead. And a lot to still
You say
achieve.
property has been in the Rapp family for many years.
Yeah.
Did you always know that you were going to head up a property fund? Was it there in the recesses of your mind?
I think I always knew that I wanted to be a deal maker. I wanted to be in business. I've been very fortunate from a very young age to know that this is what I wanted to do. My father's an accountant. I grew up with, in his practice, holidays were spent, helping out in that business. So business has always been something very much, natural to what we've been doing. I've always known that I wanted to be a deal maker, and I've been very fortunate to be in that place. The fact that I can use that skill in property now is really a bonus.
Now you see, you have to give me the secret to great deal making. Can you do an ABC to deal making?
Can I do an ABC? I think you've got to be able to know what you want to get out of a deal. I think that's very important. If you can go in there with a very clear understanding of what your objectives are, why you're doing the deal, and what your non-negotiables are. I'm not an aggressive negotiator. I don't stamp tables, I don't scream, I don't shout. That's not my style. I'm very direct. So I know what I want out of a deal and why I want it.
You define your parameters up front.
Correct, and I tend to also go in with a lot of modelling work done beforehand. So I sort of know the impact of a change in an interest rate, a lease rate, etc. So as the negotiation unfolds, I'm sort of very aware of the key value drivers and what that impact is on the ultimate price or the deal structure that I'm prepared to pay. So we do a lot of pre-work before the deal happens. And then the negotiation, I think, is also a lot about the chemistry between the two people doing the deal.
Important to eyeball your opponents, so to speak.
Absolutely. And my view is put the deal breakers on the table up front, understand where they are, but it's a style issue. For me, that works. And I think that's important. A successful negotiator knows their own style, knows what works, and sticks to their style. They don't tend to get sort of sucked into another person's paradigm and what they're trying to achieve. But ultimately, if you can achieve your objectives and get that done at the right price, I think you've achieved a good deal.
And what about knowing when to walk away?
Well, that's critical. What I always tell my team is many of the best deals we do never see the light of day. because that's when we decide not to pursue a deal. We've done the research, we've done the analysis, the price is wrong, thank you, we're not pursuing it. That for me is a good deal, as much as doing the deal and buying an asset is knowing when to walk away. So for us, we'll say that a lot of the work that we go through never sees the light of day, but that's good. When we've ended up making a positive decision, saying we've reviewed all the facts, we've looked at the analysis, we're not proceeding, I'm very happy that that's a good, solid, well thought through decision. What's in my diary for the rest of the day? Do you know which meetings I'm going to?
Yes, you've got a few. You've got to go to the Standard Bank conference.
Right.
And then 6 o'clock, another meeting.
Another one. Okay, a normal day. All right. Thanks.
So Laurence, tell me about Natalie.
Nat's fantastic. Nat made sure my diary is always running smoothly. A lot of my travel plans are done. I tend to work at quite a frenetic pace. And she's great. She makes sure that all the meetings are there and that I'm in the right meeting at the right time, which is always quite important. So we really couldn't do what we do here without Nat keeping me on track.
Compliments flowing from Laurence, Natalie. What are your thoughts about working for this man?
Well, firstly, one dynamic person, an amazing person, always takes everybody's interest at heart. And everybody loves him. He's very energetic, very on the go, and yeah.
So not a bad word between the two of you.
No.
I believe you recently got an award.
Was it the Duracell Bunny Award, Nat,
Yes.
for keeping up with me and trying to find me? So I tend to sort of run around a lot, in and out of meetings. My cell phone is always on my ear. So I'm particularly bad at running my life. So if it weren't for Natalie and my wife making sure that I'm at all the meetings I need to be at, things would never happen.
Best supporting
Best supporting actress. Well, this was Nat's award, and as we said, nothing that I do here could be done without Nat in that vital role that she plays. So the team decided this would be the best award for her, and the animated film award, I guess, at least it's not a drama.
What about the small business out there who's looking for space, who has a retail offering? How do you tend to deal with the businessman who doesn't have the leverage or the negotiating power of the heavyweights when it comes to the tenant profile?
Look, it's a critical component of a shopping centre to have the independence in there as well. Because otherwise, if all we ever had was the national tenants, then every shopping centre really looks very similar to one another.
There's absolutely nothing to differentiate.
Absolutely. So you do want to be able to bring in the independents, the line shops into that market. We look for track record. People who've maybe been in business in other centres, how they performed in terms of their financials, what is their product offering like, and our team will spend a lot of time with these types of tenants to understand their business model in order to put them into the centres.
In this tougher environment, where can you find additional growth? Is Africa at all exciting to you?
No, Africa isn't exciting to us at Vukile. Our view is that Africa has got a lot of potential as a property developer. If you're going to go in there and do grassroots development, I think there may be very good opportunities to extract value out of it. That's not our core expertise.
Will you keep an eye on it?
We have to. We have to keep looking out. I think the underlying demand fundamentals and the growth prospects in Africa are there, but I think it's all about the right entry point into that market, and we don't think that entry point is correct now for us. We think on a risk-adjusted basis, Europe and potentially the US offers better value, and we'll be looking more into those areas as opposed to Africa at this stage.
Lessons to other businessmen out there who are wanting to forge a successful business career in a relatively tough South African environment. What would you say holds true at the moment?
I think you've got to be tenacious. The markets are certainly tough. I think anybody who's going to be sucked up into the negativity at the moment is going to struggle. And let's be honest, there is a lot of negativity. Talks around any, braai or dining room table is around the negative issues, and they're there, and I think it would be foolish to ignore them. I think we've got to sort of try and be positive. But at the same time, it's saying, well, how do I now understand the new environment? And how do I take these new sets of facts and turn those into opportunities going forward? So I think, it's got to be, you've got to be realistic. You've got to understand the environment you're in. You've got to understand the volatility and be prepared to accept it. I think that's a key part of it. We are living in an emerging market. We are in
There's no point moaning about it.
Exactly. It's an open emerging market, So when emerging markets are the flavour of the month, we get tons of capital flowing into the country and we all benefit. But by the same token, when we go off the risk curve, well, then the money is going to flow out. These are frustrations. That's when I think you've got to be smart as a business person and say, well, how do I hedge my bets? How do I maybe have some developed markets, some emerging market exposure, hence coming back to our story, the Atlantic leaf and European exposure that we're looking for. So my advice to people at the moment is really sort of be realistic, take the facts as you see them and turn those into the opportunities that you need going forward. There are always angles, I think, that one can try and find.
There are a number of detractors who aren't as optimistic, and specifically in the property space, who look at property, listed property as a collective and say 2016 is going to be a very tough year for listed property.
I agree. It's going to be a very tough year. I think the business model that many of us have been running over the past period, where there's organic growth out of your portfolio and then you look to spice that up with acquisitions, that may be tough for those reasons I mentioned earlier, on the basis that I think assets need to reprice in order to make sense. But there will be other opportunities. But Bronwyn, a key point that I want to raise is property is a long-term game, and people should be investing in property for sort of what they see over a 5 to 10 year horizon.
Often investors come into the property space with a very short-term horizon. They need to change that mindset, is what you're saying.
Absolutely. I think if I reflect on discussions with colleagues in the industry, fellow CEOs, it's a frustration that there is such a focus on what's your next 6-month growth figure going to be, that it often leads to the wrong decisions on properties. We are also realistic. We understand we've got fund managers, they've got investors, and everybody's looking at returns on a monthly basis. So we understand that game. But I think we'd be encouraging investors to say invest in property for the long term. Property's got to be a stabilizer in your portfolio, and understand the underlying assets and the cash flows of what you're really buying into.
Do you think property gets enough attention from potential investors, from the big institutions in South Africa?
It's certainly been growing. It's one of my hobby horses. I'm also fortunate to be the chairman of the SA REIT Association. We speak a lot about that in terms of saying what should the ideal allocation to property be in a portfolio.
And what do you deem that to be?
Well, if you speak to the asset consultants, and they're the experts there, they'll tell you there are a range of studies which could see it anywhere from 15% up to 25, 27% in that portfolio. So on the whole, I think that South African fund managers are probably underweight property. But then if you look at the value of the REIT sector relative to the JSE, we may be 3 or 4%. So it's very difficult for them to get fully weighted on South African REITs alone, or South African property companies alone. So to the extent that we're able to bring in more assets here, you may see that growing. But when you look at property over the last number of years, it's been the top performing asset class relative to bonds, equities and cash in probably 8 of the last 10 years.
It's just whether it can sustain that momentum.
Well, what I think is very interesting is go and have a look through the cycles. So yes, last year I think was around 8.5% that we did, which was still the top performing, not by a massive margin relative to cash, certainly significantly lower than the high double digits. In fact, I think we were in the mid-20s in the previous year. So what you're seeing is that properties outperformed at all different points in the cycle. And I think that's what investors need to be understanding, is to look through sort of this short-term volatility and say it's an asset class that's got a strong annuity base to its income, strong contractual cash flows. That is what I need to be buying into.
And it doesn't, the economic environment actually isn't going to impact that annuity business at the end of the day.
Well, not immediately. So that's what's very interesting to look at. So let's assume that I've just signed a new 10-year lease with a supermarket in a shopping center. Okay, we've just signed that, and that lease is now in place. This is a highly regarded, credit-worthy organization, a listed organization, right? I'm using a hypothetical, they're all in that space. Now let's say that the consumer starts coming under pressure. Okay, what's going to happen? So you may see
early on in the life cycle. So where are we in that 10-year lease?
Let's assume now, markets are turning, debt pressures are mounting on the consumer, and maybe they're going to spend less. Okay, what's going to happen? That tenant has still got a contractual lease. They still have to play it.
They're going to come and negotiate, though.
No, there's a lease that's in place.
So you won't negotiate?
It depends on how severe it gets to. But there is such a margin with the big nationals that you should be very, very comfortable and very safe.
And that lease will probably take you through the downturn and then back into the upturn.
So now where does the risk come in? If you have a lease expiring into a downturn, that's where you may get pressure on your expiries. Where we've been very successful at Vukile is what we call reversions. So when we sign a new lease or a lease for an existing tenant that gets extended, that's called a reversion. Now we had an average of about plus 13% in our half-year results, positive reversions, which is phenomenal. So that shows that even in a difficult consumer environment, our centres are still trading well enough that we're able to get increases in our rental. And I think also what I'd encourage investors to have a look at is the last 3-4 years have not been easy by any stretch. We haven't had a buoyant environment.
But you still performed
but we've still been able
relatively speaking.
Exactly. We've still been able to get positive reversions, which means that our centres are performing well. We've got strong footfall coming through them, and therefore there is still strong tenant demand to be in those centres. And therefore you can get the rental increases that you're looking for.
Final question.
Sure.
Let's look 5 years out. Where do you see the South African property space? Specifically with your hat, as chairperson of the South African Real Estate Investment Trust.
I would see the REIT sector continuing to grow in vibrancy. I think you may see, from a cycle point of view, you may see some of the smaller players falling away. That will lead to bigger funds being formed. I think you'll start seeing even more international exposure coming into this market as the local market maybe gets a bit saturated, and we're able to then tap into cost of capital here and find opportunities offshore. Largely because I think South African investors are still, in a sense, underweight property and can look to allocate more money there. But I think it's a sector that is very well governed, very vibrant, lots of activity, constantly raising capital. And I would expect to see that vibrancy continue going forward.
Laurence, thank you very much. I've been chatting to Laurence Rapp, who is CEO of the Vukile Property Fund. You're watching Captains of Industry here on CNBC Africa, DSTV 410.